Live the home selling dream. Call Brock in the KW Selling Team. Go to the KWSellingTeam.com.
Hey everybody, I'm Brock Fletcher from the Selling Team with Keller Williams Real Estate Company. Thanks for tuning into this week's Brock Talks. I wanted to talk about a little higher level type conversation. So I've drawn a couple graphs here on the whiteboard. I wanted to explain the way that average people or non-wealthy people or non-investor people think about how the market performs and why it is not productive to your financial success. So this top graph here, this represents the market in terms of how people think about it. So this would represent a high value mark, and this would represent maybe in a recession a low value mark and the perception of real estate value. So average thinkers, people that are not always thinking about real estate, they think that this is how the market works and that values go up and down and up and down and up and down. And they're thinking that they want to buy at the bottom of the market. And they misperceive that it works this way. The problem with this kind of thinking is it doesn't take into account the fact that the market goes up by 4 to 5% per year. This is how it actually works. Values go up and down and up and down and up and down and up and down based on economic factors and recessions. However, the baseline is increasing at least 4% a year. So the way the market actually works and the way that investors and wealthy and people who are involved in real estate transactions know that values are automatically going up at 4 to 5% per year. And when there's a recession, this represents a recession line, values are still trending upward. And as time goes by, values are still going up and up, but there's some opportunity to buy in the middle. And investors are always in the market. But the differentiation between these two methods of thinking is the separator between haves and have-nots as it pertains to real estate and wealth accumulation in the United States. You have to get rid of this kind of thinking because this is erroneous thinking. The people that are attempting to buy low all the time, and that is their determining factor for buying or not buying, typically never transact. People that understand how money actually works and how over time real estate is automatically going to go up at 4 to 5% per year, they understand that it's always a good time to buy so long as the property meets their needs, or if it's an investment property, there's enough of an economic return where that property meets their standards for financial accumulation. So I know it's a very high level topic. I know that a simple graph isn't going to explain the whole thing, and yet it at least will get your brain churning a little bit. If you have any questions regarding the market or wealth creation through real estate, or just any questions at all about real estate, I'm always happy to answer those questions. My cell phone is the best way to get me. It's 517-303-3262. Thanks so much. Have a great day.
Live the home selling